Everything you're about to hear is for education and entertainment purposes only. Whilst we are licensed, we're not aware of your personal financial circumstances. Any advice is general advice. Equity Mates operates under Australian Financial Services Licence 540697.
Equity Mates!
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.
Equity.
Welcome to another episode of Equity Mates, a podcast where we explore what's possible in the world of investing. My name is Bryce, and if you've just joined us for the first time, a huge welcome. We have a massive episode today. As always, I'm joined by my equity buddy, Ren. How are you?
I'm very good, Bryce. Very excited for this episode. You're right, it is a big one. Nothing bigger to start with than inflation and interest rates, but we wanted to check in on that story, and we've also done a bit of a deep dive on Australia's CPI and where the inflation is in the system. After that, we're looking at the pre-IPO ETF. You told me before we started recording that your Instagram ads are filled with them, so we'll find out. And then finally, we are bringing back the segment, Not Financial Advice, because there is a worrying trend emerging, especially on TikTok, where people are investing on the back of astrology, star signs, and numerology. So, of course, we're going to jump on that trend and figure out what stock is next with Mercury in retrograde.
Yes. Well, let's kick off.
News and markets.
14th interest rate rise might be on the cards.
I would say is likely on the cards.
Definitely. Yeah, I would be surprised. I'm going to say I would also be, I don't know if disappointed is the right word. I just don't think the RBA has gone hard enough. Full stop.
Okay. Well, before we start...
I would be disappointed if they don't.
Okay, fair.
Yeah.
So, for context, since May 2022, Australia has had 13 interest rate rises. We've all felt it. We've all heard about it. The next RBA meeting on their new 6-week cycle calendar is scheduled for the 5th to the 6th of August. And at the end of that meeting, we'll have their next interest rate decision. Rewind 6 months and everyone thought we'd have an interest rate cut by this time. But when the facts change, opinions do as well. In this case, the facts that have changed is that inflation is stubbornly high. In May, the annual inflation rate actually ticked up to 4%. So now the likelihood is maybe another interest rate rise. And the question that comes out of that is, if 13 interest rate rises didn't change anything, will the 14th?
Well, they probably need to go 14 to 15 pretty quickly. I think as well, to confuse things, the unemployment rate's just ticked up as well. So that's what the RBA want to see.
But you do have to dig under the hood of that, because we actually created more jobs. 50,000 new jobs created. It's just that the amount of job seekers with immigration and the participation rate increasing, that number rose faster. So we're still adding more jobs.
And wages are still running.
This is a big concern that I think Australia has that parts of the rest of the world don't have, which is the longer the inflation story plays out and the less time we take to get it under control, the increased likelihood of a wage price spiral, where because inflation is more sticking around for longer, people have more time to feel the effects, to go to their boss to negotiate a rise, which then is the spark of the wage price spiral.
Yeah. So let's answer the question, will it make a difference? Will it change anything? And to do that, it's important that we look at what is actually contributing to the 4% CPI indicator.
And before we even look at the categories, the economic theory behind raising interest rates is demand destruction. That's the economic term for essentially we're going to make people hurt until they stop spending. You can see why they use the euphemistic term demand destruction, because it is an incredibly blunt instrument. It's we're going to raise the price of debt, and in particular in Australia, like mortgage stress has gone up, and people have stopped spending on other things as a result. At the same time, it also incentivizes savers to save more because they get a better rate of return. So that's the economic theory. And that would be the theory behind the next rate rise. So with that in mind, what's actually driving inflation in Australia?
So the most significant price rises were housing, up 5.2%, food and non-alcoholic beverages, up 3.3%, transport, up 4.9%, and alcohol and tobacco, up 6.7%.
Yeah, now I put an asterisk next to alcohol and tobacco because if you look at the subcategories, the biggest driver of that was tobacco, which was up 12%, and that's government driven.
Yeah.
So obviously that is inflationary, but I feel like that's probably less relevant to the conversation as some of those other categories because that price was going up whether people were buying it or not.
Yeah.
So housing, food and transport. And the key subcategory under transport is fuel. They're not exactly discretionary purchases, are they?
Not at all. This is the big problem as well. These are what you would call inelastic categories, and that means essentially that despite changes in price, the demand for that good or service doesn't really change.
Yes.
Despite rents going up, despite housing prices going up, the demand for that is not going to change. Despite groceries at Woolies and Coles going up, we need to eat, we need to buy. So the demand is not going to change. So to your point, Ren, around demand destruction, a lot of the CPI or the inflation here are in these inelastic categories. Rents up 7.7%, electricity up 5.2%, health up 4.1%, insurance up 8.2%. 4 categories there that we need to live.
Yes. Yeah.
So raising rates is not going to change my need for insurance. It's not going to change my,
They're inelastic because the demand is inelastic. Whatever the price is, the demand doesn't change. And so therefore, the demand destruction that we're hoping to see, we may not see even if we get a 14th and a 15th rate rise. Obviously, like, at some point people are just buying less and that's the demand destruction. But if we flip it around, what we've done is had a look at the other categories which you would say are more elastic. So demand changes based on price. And here are some of the subcategories that I think tell the story. Recreation and culture, down 0.6%. Holiday, travel and accommodation down 3.9%. Furnishings and household equipment and services only up 0.1%. And clothing and footwear only up 0.3%.
Stark differences.
So where demand is more elastic, the demand destruction is already happening.
The challenge is, and I think obviously the RBA are going to consider this. They have to.
Yeah.
In the same breath, it's not sustainable to have inflation at that 4 or ticking up anyway for the next 12 months.
And there is an additional pressure that has sort of arisen in the past few weeks that I think is also going to put pressure on them to raise because they're now out of sync with most of the rest of the world. So the US is making very strong overtures that they're going to cut. Inflation is back within the Fed's target range, at least their preferred measure of inflation is back within their target range, and unemployment is ticking up in the US, and Jerome Powell has said that he's watching that and is concerned. So everyone is pretty confident by September, the Fed will cut. Europe, similar story. It's looking like inflation is back within target and high expectations of a cut. Australia doesn't want to be out of sync with the rest of the world for a few reasons, but importantly, one, if we do raise while everyone else is cutting, the Aussie dollar gets stronger. That's not good for our exporters. If you look at the share price of our miners, they've already had a pretty tough year. So that's going to be a concern. But also other things that we export, i.e., like education and stuff like that, get more expensive. And there's also going to be just like general political pressure if we have inflation high and are raising rates and the rest of the world is cutting.
Political pressure on both sides, I think, going into election year next year.
Well, there was talk, so it needs to be done by like August or September 2025, the next federal election. But there was talk that Albanese was going to call a snap election at the end of this year after some good economic news.
Nope.
But that talk has all gone because the good economic news remains
it's not there.
Hypothetical.
Yes.
So I think, look, that's the context that you need to know going into this RBA meeting in a couple of weeks that we'll all be watching. There's going to be certainly plenty of press coverage about it. But prepare yourself for a rate rise.
Yeah, we're on bullock watch.
And prepare yourself for that rate rise, perhaps not doing enough, and then another conversation about another rate rise.
I think if they do it, I would bet if they do it, they'll do 2.
You reckon they'll do a double, or they'll go back to back?
Back to back. I reckon if they do, they'll go back to back. Bang, bang. We're nowhere near as high as the US or Europe got to. Both of them are back to where they need to be.
Yeah.
Enough said. So, Ren, as you said in the opening, I want to do a segment called Beware the Pre-IPO ETF.
Okay. Now, this is popping up on your Instagram. You're being targeted by a lot of ads.
Yeah.
But before we get into why we should beware it, let's start with what it is.
So, as we know, fewer and fewer companies are IPOing each year. They're all being scooped up by private equity or just staying private for longer. Major frustration of ours as retail investors.
Yeah. It means the opportunity set for people like us is shrinking.
Yes. What is then the result of that? There seems to be a trend now emerging where these startup businesses or active ETFs are coming to town and saying, we have access to all of these private companies. We're rolling them up into funds that are for the retail investor. Invest with us, get access to SpaceX, get access to Stripe, get access to these private companies that should be IPOing but aren't. Canva, you name it.
And the reason that they can get access to these funds, to these companies, is because there's like highly functioning grey markets for a lot of these stocks.
Yeah, secondary market.
Yeah, because they're so big.
Massive.
And there's so many investors and employees that have shares. All these companies have an incentive to offer some form of liquidity. Now, some may argue that the best way to offer liquidity would be to IPO, so we could all participate, but they all have their reasons why they don't want to, mainly because being a publicly listed company is a headache. And so they do things like every quarter or every year, they'll set a price and the company will be the buyer, or they'll line up a buyer in one of the big funds and people can buy and sell. And so these shares are traded. They're just not traded in a way that's accessible for us.
Yeah.
And that's the selling point of these pre-IPO ETFs.
Yes. So it seems enticing. I'm getting pumped with one at the moment, and I don't know if you are, but I've just seen it a lot. I've also heard it on a bunch of podcasts that I listen to. Instagram.
Honestly, all I get
podcasts.
pumped with these days on Instagram is cooking videos. It's so annoying. So no investing
Are you
stuff.
head chef at home?
I guess so, yeah. Alice probably would disagree. Yeah, I guess so. But,
Why cooking videos?
I think because I'm normally on the Equity Mates account and I sometimes send them to my personal account if I want to look at them later. And so their Instagram is obviously like, this guy loves cooking videos and it's non-stop.
Yeah.
So that's my way of answering that I haven't seen.
There's one particularly that has been doing the rounds on my social feeds. It's a company called Destiny, and their ETF is called Destiny Tech 100.
Okay.
The ticker is DXYZ.
Is it listed in America?
Yeah.
Yeah.
Listed in the States. Now, they claim that they have access to they're creating an investment portfolio of the top 100 high growth tech companies in the world, unlisted. You then go onto their page and you can have a look at their holdings. 36% is in SpaceX, 9% in Axiom Space, 4% Epic Games, 3.5% in OpenAI, 3% in Instacart. Then the list goes on: Stripe, Klarna, Impossible Foods. Some pretty big, enticing names in there.
Yeah. Also, FYI, Instacart is listed.
Yeah, I knew. I thought that as well.
But recent IPOs.
Yeah, it would have been in there.
I mean,
pre-IPO.
Look, if you were to say what were the companies I would expect to be in there, those are the companies.
Yeah.
I would have also expected the Chinese tech giants, ByteDance and Shein.
Yeah.
And I would have expected to see Canva as well. But But yeah, like SpaceX, Stripe, Impossible Foods, OpenAI, the weightings are interesting. I would have expected a bigger weighting to OpenAI and Stripe.
Same.
Yeah.
Yeah,
but so far,
so good.
Pretty fair. True to label.
Yeah, well, that's
Okay.
that's where I was like, okay, this is interesting. What's the catch? Because I was like, look, I could see myself getting a bit enticed with this. You dig underneath, 2.5% management fee.
Oof.
Yeah, so it's pretty expensive, but you're kind of like, oh, is it justified given the companies, the access that you're getting? Maybe, maybe not. They claim top 100 companies, but the portfolio only actually has 23.
Okay, fair enough.
But Ren, where it gets, I think it's a no deal for me is in its construction, because it's a closed end product, meaning that when you are buying and selling, you're not trading in and out of units.
Do they call it an ETF? They can't, because that's the whole point. An ETF is an open-ended product.
They call it an exchange-listed portfolio.
Oh, that's sneaky. That's sneaky.
Yeah,
the old ELP.
Yes, an exchange-listed portfolio.
Yeah, okay. Because a closed-ended product for Australian investors is a listed investment company, an LIC.
Yes.
And so you have the problems of discounts to net asset value.
Yeah, there's no relationship. You're not buying in and out of net asset value. You're just trading the stock.
Yeah.
And so the price is driven by the market dynamic. The price is not driven by the underlying performance of these companies. And so when I had a look at the NAV, it's crazy. As of their most recent reporting in March, net asset values of $50 million.
Okay.
But it's trading at a market cap of $150 million.
No way.
Yeah. So mind you, when this company IPO'd, it got to close to a $600 million market cap. Yeah. So everyone's getting super excited with this.
Oh, no wonder they're doing all their advertising on social media.
I know. And so this is the point. Like, you come and you think, okay, I'm going to get access to these companies, but you're actually just trading on the hype of it. You would be buying into this hoping that the advertising on Instagram works.
But, okay, in their defense, the biggest problem Australian investors have with listed investment companies is they all trade at a discount to net asset value.
True.
And everyone looks at Jeff Wilson as this, savant, marketing savant, because all of his listed investment companies trade at par. These guys are trading three times their net asset values. So move over, Jeff Wilson. Get these guys advertising.
True. It is a marketing game. So I guess, though, to take it back to like the fundamentals of investing, though, if people are sitting there going, oh, great, well, it's trading at a premium, like, you don't want that, because you're effectively paying 3 times more for the underlying assets.
Yeah.
So you don't want to be doing that.
No, this is not a good investment. I know we don't give investment advice here, and general advice only, but I can't see anyone's personal financial circumstances aligning with paying 3 times these pre-IPO stocks.
No.
Especially because so many of them, their last funding rounds probably were not at the values that a public market would value them at. Often these funding rounds are quite inflated, and then they're using that value and they're still trading at 3 times that value.
And if you do the digging on Destiny Tech 100, you can actually see what they bought in at some of these companies, and massive write-downs already. Stripe has had a massive write-down since it raised. I imagine SpaceX has had a small one, but the 2 most salient examples of this are Instacart and Reddit. What they raised at on the journey, and then what they're trading at now in the public markets. Yeah. So buyer beware. If you see these things pop up and you feel like it's great, I'm finally getting access to these awesome companies, do the work and actually have a look under the hood. My suggestion is, if you do, there are actually some legit fund managers, albeit unlisted themselves, that are out there, still have pretty meaty minimums, but there are ways to get access to some of these unlisted guys.
I guess my concluding thought on this is there's plenty of ways to make money in the market, and obviously these names are sexy and exciting and changing the world in different ways, but you don't need to chase bad opportunities to invest in them.
Yes.
And to be honest, a lot of them a lot of the value is maybe already there until they like have their next round of innovation or their next leg of growth. So, just because Stripe has changed the way that we do commerce on the internet doesn't mean it's going to 5x or 10x from its value today.
That's true.
So I'm going to be a user of their products. Hopefully one day I'll be a user of a SpaceX and an Axiom space product. But I could live a long and happy life never investing in their stock.
Well said. All right, well, we're going to take a quick break, and on the other side, we're back with a not financial advice segment unpacking the latest trend in using astrology and star signs to make investment decisions. We'll be right back. Welcome back to Equity Mates. We've been unpacking the decision around the next RBA meeting and pre-IPO ETFs. But it's time for...
This is not financial advice.
That is right. One of our ongoing segments where we look at some of the more ridiculous financial advice that is put out on the internet. And this is in line with a weekly wrap that we do on Instagram every Friday, collating some of the most crazy, out there influencer commentary.
Just terrible advice out there.
So if you're not following us on Instagram and you want a bit of entertainment to close out the week, make sure you go and follow us on Instagram. However, one thing we've noticed is there is a big trend in using astrology and star signs to make investment decisions. So what we're going to do is have a listen to some of these more crazy, I don't even know what they're called, astrologers or...
financial advisors.
Financial advisors. Have a listen to some of the more crazy ones that are out there, and then we'll close out having a look at our star signs to see what they say about us as investors.
I started 2020, 2021, 2022, 2023.
So we're talking maybe like $150,000 a year?
I turned 40,000 into 440K.
That's awesome.
In 10 days.
Day trading crypto or just like finding the stocks to hold?
Swing trading, and I would use like 17x leverage.
Oh,
But if I was really sure.
what do you mean really sure? You can never be sure. You can't even be sure on stock. I'm pretty confident on Apple. It's impossible for me to say I'm sure it's going to go up.
Right. But for me, I'm using a lot of tools. I'm using
A lot of fundamentals, I'm sure. Yeah.
fundamentals, trading charts, and I'm also using
Plugins?
astrology.
All right.
Oh my God.
Was that a joke?
No, seriously.
Firstly, the fact that he says 440K thousand.
Yeah. But then hold on, that's just a taste of
17K leverage. This guy doesn't know what's going on.
the astrology.
Millionaires don't use astrology, billionaires do. And this is exactly why I combine astrology, spirituality, esoteric knowledge with crypto, because they work hand in
crypto.
hand. I also cover news on my channel and interesting coins that I like, but if you want to watch a spiritual/crypto video, right there, I just dropped my new one. Channel link is in my bio.
You ever wanted to invest in real estate? Well, today I'm going to be talking about the placements that can be the most successful at it and make a lot of money from it.
Nice.
Let's go. Okay, so if you have Jupiter or Venus in your 4th house, this can indicate you can make a lot of money from real estate investing. If you have Libra or Taurus in the 4th house, this also means you can make a lot of money from real estate investing. If you have Sagittarius or Pisces in the 4th house, this does indicate you can make a lot of money from real estate investing.
Everyone can make a lot of money.
Neptune in the 4th house, and it's positively aspected with a trine or sextile to Jupiter or Venus. This can also mean you can make a lot of money from real estate investing. Okay, so if you have your 4th or 5th house ruler in the 11th house, this can also mean you can make a lot of money through real estate investing. If the ruler of your 2nd house is in the 4th or 5th or 11th house, this can also mean you can make a lot of money through real estate investing. Have you ever thought about investing in real estate?
Oh god.
Walk us through a little like out loud thinking process about like what goes into finding the connections between astrology and financial markets.
So at any given moment, the planets in the sky are in a certain position. They're all moving at different speeds. They're all moving in different orbits. And the planets, therefore, are always making different angles to one another. And these angles tend to represent either easy or difficult world events. And the planet themselves symbolize certain themes in the world. So you'll combine X planet with Y planet in a certain degree. And if you're using multiple charts, as in the chart of the given sky to something that was born, whether it be a person or Bitcoin, because we're we're all born at a snapshot of the planets, and we can see how our life is going if we apply the current planets and those geometric aspects to something that was born. So if you do that to Bitcoin, you can predict if X aspect to like Y planet in Bitcoin's chart, then number go up, go down. If this is happening to the chart of the US, then this looks like this kind of world event.
This is ridiculous.
I think that look, if you want more, go to our Instagram.
Rabbit hole.
We'll include a link in the show notes to that post. It's concerning how big it's becoming. But look, Bryce, we are one to jump on a trend like nothing else. And so you've pulled some information for us.
Yes. So I have pulled what our star signs say about us, full stop, not at this point in time, because I went down the rabbit hole. I'm actually having a look now. So I think I'm a Taurus, you're a Scorpio, am I right? Yeah. So I think I'm actually in the, and there's probably people out there who are going to roast me for this because I actually have no idea, but I think I'm in the 8th or 9th house at the moment, which could mean anything from intimacy, sex, bonding, shared money and property, or travel, study, higher learning and ethics. I have no idea. Anyway, let's have a look at what our star signs say about us. So I'll read mine, Ren, and then maybe you can read yours.
Sure.
So Taurus. Taurus is one of the most abundant star signs of the zodiac, notoriously stubborn, reliably bullish on a life of luxury. The sign most associated with money, those of us with planets in Taurus know how to earn, save, spend, and generate wealth.
Sorry, this is just a star sign rating. Do we have like something more like investing?
That's the point of this stuff. You can apply it to anything.
Okay.
Calm and patient, I understand how to invest, and we also have a level-headed and steady approach to life, so we will not panic buy or sell during market fluctuations. We're pragmatic, security-focused, but also like to enjoy the good life. Those of us with planets in Taurus would buy one very expensive item as opposed to 10 mid-range. We understand and have great respect for quality over quantity. Sound investment would be the Earth's natural resources. Taurus is an Earth sign that is fixed in quality, so finite commodities like gold and silver are classic investments that they can hold in their hands. Right. So that's it. Pretty straightforward. What about you?
Okay, Scorpio. Scorpio is a master at detail and control, a forensic sign who understands energy, financial rhythms, and the power of wealth. Ruled by Pluto, the god of the underworld who holds dominion over all the riches of the earth, Scorpio possesses the same depths of power and understanding. I'm not going to read all this, to be honest. Look, this is all bull. Sorry if you believe in star signs, but where I want to go and where I want to finish this segment, this depressing segment about the state of financial advice mainly on TikTok, I think it's fair to say, is it's not just astrology. Because recently we came across another investing trend, which is numerology.
Okay.
How about a cheat code for wealth? Obviously, we know Vladimir Putin's way richer than Elon Musk, right? Do you agree with that?
Yes, absolutely.
So we talked about in the very beginning that 28 is the number of wealth. Elon Musk is born on the 28th. Bill Gates born on the 28th. But Vladimir Putin's not born on the 28th, so where'd he get all his money from? Well, Vladimir Putin is born October 7th, which happens to be the 280th day of the year. Now, Vladimir Putin also got married on the 28th, and his first daughter was born on the 28th. Here's a hack for you guys. If you want to get richer, have a kid born on the 28th. My kid, his birthday was yesterday, December 28th. He was born a few years ago. Since he's been born, I've been making millions upon millions. So again, this works. I did it myself. And if you guys think this is a coincidence, that's all good. We could talk about Apple being founded 3/1/1977, 13/1977/28. Steve Jobs born 2/24/1955, adds up to 28. He's a 28 life path. He founded Apple 3/1/1977, and he incorporated 4/1/1976. He's a 28. He started the company on the 28th day, and he incorporated them.
What do you reckon about that, Bryce?
So if I do this, my birthday is 12th to the 5th, 91, which if you add them together is 108. Minus 80 is 28.
Why minus 80?
Doesn't matter. Doesn't matter.
Well, I was actually pretty stoked because, so apparently, according to this guy, and again, we'll include the link to this Friday roundup, the numerology one, if you want to go deep. Apparently, a 28 and an 8 are both wealth life paths. I was born on the 17th, 1 + 7, 8. Oh, yeah.
Oh, my God. 12th of the 5th. If you plus all of those together, 5, 6, 7, 8, that's 8 as well. And then need a 2. Anyway, this is all to say there's a lot of NFA out there.
Unfortunately, if I'm 17th November 1992, so 1 + 7 + I've added all those up, it equals 31.
Oh, close.
So if only my parents had me 3 years earlier.
Then, oh my God. Anyway,
the other thing in a number of his videos, he says make sure you have a child on the 28th. But like, speak to any expectant parent.
Oh my God.
Wait, what?
My birthday adds up to 28. 12th of the 5th, 1991. 1 + 2 + 5 + 1 + 9 + 9 + 1 equals 28.
Holy
yeah, baby. I'm going to be rich.
All right. Well, look, I think we have prattled on for long enough. The links to both of those posts will be in our show notes. And remember that there's a lot of terrible financial advice out there. So be careful and go to a real financial advisor. Don't look at your star sign when deciding what stock to buy.
That's it. And you can do that, equitymates.com/advice, and you can fill in more appropriate information and we can hook you up. But Ren, as always, a pleasure to chat stocks. We'll pick it up next episode.
Sounds good.
You have been listening to an Equity Mates Media production. In the spirit of reconciliation, Equity Mates Media acknowledges the traditional custodians of country throughout Australia and their connections to land, sea and community. We pay our respects to their elders past and present and extend that respect to all Aboriginal and Torres Strait Islander peoples today. This podcast is intended for education and entertainment purposes. Any advice is general advice only and has not taken into account your personal financial circumstances, needs, or objectives. Before acting on general advice, you should consider if it is relevant to your needs and read the relevant product disclosure statement. And if you're unsure, please speak to a financial professional. The hosts of this podcast and their guests may have positions in the companies mentioned. Equity Mates Media operates under an Australian Financial Services Licence 540697.